right, let's go and talk about the market breadth, right? So there should be some kind of confirmation of either one scenario or another, or maybe some other thoughts that we could see here. This is a very regular view for us. This is percent of New York stocks above their 200-day moving average. And there are very, very important, kind of anchor points for us here. First of all, the analog of breadth since the 2020 COVID low, this extreme rise that we have seen into the 90s, is very analogous to the rise that we've had since 2009 low as well. So this is going to be a, kind of like a fundamental reload by institutions where they are buying the shares at the very extreme cyclical low, and that produces this humongous and quick and fast increase in breadth, where we go to the 90s right away. And then the rest of it is going to be more of the deterioration. Deterioration in the breadth, where there is a rotation and money go to now specific themes. And maybe into the end of some kind of meaningful move, the money go into some kind of flight to safety, flight to quality. So where we are right now at 25, Bruce, we're definitely here in the oversold condition, but we've been there quite a few times. I mean, we've definitely touched 25 on multiple occasions. I would say like something like this, something like this. We definitely see more of the price destruction right here. So what are your thoughts on this indicator?
Well, it's one of my favorites, and I really like to look for divergence, confirmation, non-confirmation in this indicator. We look at it repeatedly, sometimes in a very short time frame. We actually have a couple charts maybe we can look at if we have time. But here, note how getting down below 10% often is accompanied by a climactic low. End of 2018, that was a huge climactic low in there. And yeah, of course, at the COVID, and then also 2011. And so that it can be a great confirmation of climactic behavior is in the breadth and the deterioration of sentiment into those climactic events. So, and Ramon's point is very good. We don't yet have what appears to be a climactic situation here in the decline. Most of the time when you start going south like this, you keep going till you get that. So if we get that counter trend rally, Ramon, that could go up to the prior highs or higher, that would be, I think really throw people for a twist in their trading, because I think people are really, really short right now.
Yeah, there is too much money in, for the composite man to pick up. All right, well, then we go to a slightly lower time frame. These are the same New York stocks that are above 50-day moving average. So we are looking at the shorter term picture. And we could talk about other things here. We could talk about the trending environment, that is all of this right here. We could talk about the deterioration of the trending environment, which is kind of like its own sign of weakness in breadth. But there is a lot to be said about the initial signs of the divergences, where we have the higher lows being formed on the breadth, and maybe still lower lows in the index. So Bruce, you described those so eloquently. Are we seeing this correctly here?
Yeah, so we just really look closely at these. There's a couple of different ways we look at breadth. This is one of my favorites, is to stocks above their 50-day or 200-day moving average, because it's a classic trend indicator. Note here, the reason we were able to pick off this really good rally in March was because we taught, and I actually did, I think I wrote a blog, but I definitely talked about it in power charting video, green shoots. So look at the green shoots from late January to mid-March, where you had higher lows in being formed in the indicator and lower lows being formed in the index, and it led to the most important rally that we've had of the year so far. And then we had not a non-confirmation at the high, but we started to make a series of lower highs off the peak in late March. And so that was confirming deterioration. Yes, and you can see it right there. And down we went, and we've had a very important decline since. And the stocks below or above their 50-day has really deteriorated, got into the low teens. So, but now look what we're getting. We're getting a lower low here, most recent low in the S&P, and a higher low. And now we may get a few more of those, but there's definitely the emergence of green shoots where there's a greater number of stocks above their 50-day than there was at the prior low, which shows that some stocks are starting to buck the trend. So this is, I think, very speaks to the idea of a potential rally situation developing in the near future.
Bruce, what else I like about this most recent picture is the expansion of the breadth here. So from like 12,
Yes.
11%, we go to 25. That's a significant increase there. And
Yeah.
we do have those type of rallies that are showing some kind of ability by the stocks to rally first before going in a much more substantial rise, which comes later on. And the market is still showing us, some lower lows. So there is some buying, and it's very, very logical, by the way, guys. Why does this happen? Why does this higher lows happen on the breadth prior to the price? Because institutions buy on the way down, and before that absorption process is complete, the price still could go down and the selling could deteriorate, and we could see on the way down the emergence of the demand. But the breadth is kind of like an x-ray that helps us to identify what is going on under the hood, right? So somebody's buying already because the breadth is improving.
And we know that the CO is very stealthy about how they accumulate the shares of the stocks that they most favor at a point in time. So they will use the weakness of the market to accumulate their most favored high value positions, and which is exactly what Ramon said. And we talk a lot here about directionality. And once you get a trend up or down, you want to be very respectful of the directionality of this indicator, because the market will tend to follow the directionality.